What is going on, everyone, and welcome back to another video. Today I'm going to be teaching you exactly what not to do in the stock market. As we can see on the portfolio right here, I have $3,430. If you look right below that, it says I have $135 in the negative. It got down all the way to $164 in the negative, but it's bounced back a little bit, and that is all due to the one stock I have, GoPro. As you can see on the right, down 20% right now. It got all the way down to negative 32%. This is a huge hit. I knew it was a stock going down, but I never thought that it would go down 30% in one day. I actually had 60 shares to start off the day. I sold 30 of them just to try and cut my losses and make sure I don't lose any more money. As you can see here on the stats page, the low used to be $7 and now it is $5.04. So that is a huge hit on my portfolio. I lost $90 on the transaction to sell the 30 shares, and hopefully I can at least get back to even with these other 30 shares to compensate for that. So I'm going to teach you guys how to learn from a loss and see what you did wrong to make sure you don't do it again, and what to do after you get a loss like this. So a lot of the times I would say just wait it out and hopefully the stock will return, but as you can see on this 5-year chart, GoPro is not looking good right now. I was really hoping that around here, the $14.69, it would take off and go to like $35. I was just hoping, but that was my problem and the reason why I lost so much money in this investment. So now that I shared my experience in my losing stock, I'm going to tell you how to avoid these situations, and if they do occur, how to make it better. Rule number 1. Like I said before, do not get emotionally attached. What this means is that do not choose a company based on if you like it or not. You have to look at the numbers and see if it's a good investment. You can't just invest in things because you like it. Another way you can get emotionally attached to a stock is when you buy the stock and then it goes down. And then you say, well, I can buy the stock for a cheaper price. So you buy it at your original price and then it goes down 5%, and then you buy more at that 5% discount. While this sometimes can be a good strategy, don't overuse this, because what a lot of people fall into is that the stock keeps going down and they continue to buy more and more shares even though they know it's going to be a losing investment. That's what I did for GoPro. As you can see here on this 1-year chart, I bought in late October to early November around $8.98, and I just kept continually buying more and more as it was going down and down and down, even though I knew it was probably not going to be worth it. So then you're stuck here with a ton of shares of your stock, and it just keeps going down and down, and it's basically a money trap. Do not get emotionally invested. Learn when to take your losses and get out of the stock. And that brings me to my second point, which is learn to take the loss. I know a lot of people don't want to take a loss and they only want to make money in the stock market, but the reality is not all your investments are going to make you money. Some are going to go down and some are going to go up, and the profitable investments are supposed to outweigh the losses, but still, you still need to have the losses. For example, on my GoPro stock, I bought it at $8.98. I said to myself that if it gets below $7.50, then I'm going to sell it. You guys should all have a bottom line for when you should sell a stock to take your losses and get on and put that money into a better stock position. So I said $7.50. As you can see right here, it got down to $7.44. But I was still not willing to do it. I backed out. I didn't want to take the loss because right about there, I would have lost $88 for all the 60 shares that I had. And this is a perfect example because about a week later, which is actually today, it went down to $5.08. That is $2 below. That is $2 below what I said I'd sell it at. And if I would have just sold it at $7.50, I would have cut my losses and potentially saved about $100 on the investment total. So that's tip number 2, just learn to cut your losses. Please don't go down a steep route, because when you're in a losing stock, it goes down fast and down hard. So don't get stuck in that trap of trying to never take a loss. That is what I personally got into, and it did not pay out very well, as you can tell. Now on to tip number 3. This is more of a statement than a tip, but it's easy to say I would have, or I could have, or to say if. If I bought this then, if I just sold this 2 days ago, if I bought Bitcoin 20 years ago. All these are examples of if statements. It's easy to say what you could have done, but you can't change the past and you can't predict the future. So that's why saying if, could have, would have, all those kinds of words, they really don't mean anything in the stock market. I hear a lot of new investors saying, oh, if I bought Bitcoin 20 years ago, I'd be a millionaire. Or if I bought this one penny stock 10 days ago and it went up 10%, then I would have made $300 or something like that. It's so easy to just fall into the trap of I would have, I could have, or if, but that's just not how stocks work. So please save yourself time, save yourself worries. When you're thinking about stocks, erase those 3 words, if, would, or could, from your mind. And you will be able to make a lot more profits not thinking back in the past. That is all for that tip. And finally, tip number 3, once you learn to take your loss, use the money to buy a better stock option. It's not the end of the world if you lose 5 or 10% of your portfolio. You can always get that back within time. Just take the money out of your losing investment, take the losses, whatever it is, $100, $1,000, whatever it is, and just reinvest it. Put it into another stock. Put it into a safer stock if you're a little paranoid at this point. Life will go on. You need to learn from this mistake. And without failures, you're not really going to get anywhere in life, especially in the stock market. If you just take one loss and then you're out, then what are you doing? Why are you even in the stock market? There's really no point, because the stock market obviously has its ups and downs. So for you to think that you could only be on the positive profits, that is just naive and immature of anyone who thinks that. Sorry to just roast you guys for having that mindset, but in all fairness, it's true. And actually, I'm going to add one more tip for you guys just to end off the video, and that would be to not quit. After you take a loss, after you learn from it, after you reinvest it all, don't just think of the stock market as a scam, as a lot of people do. There is a potential for a lot of growth in your portfolio, just if you keep with it, and as the saying goes, keep calm and carry on. I wish luck to all you guys with your losses or gains. Personally, I'm still kind of shook about my loss, but I'm just going to shake it off. I'm not going to act like it didn't happen, but I'm going to learn from it. And down the road, a few years from now, 5, 10, 20 years, this is going to be nothing to me because it's only $100. And at 18 years old, I still have a ton of potential to grow my wealth. And you guys do too. Whether you're 18, 20, 25, 30, even 60 years old, you still got plenty of time. So with that all out of the way, I'm going to say it one more time. Keep calm and carry on. I'll see you guys in another video. Peace out.